Hey guys, how you doing? This is your boy Renzo again with another video on how to trade in the stock market. So today we're gonna continue a lesson on technical analysis and chart analysis. And for this, we're gonna talk about two things. We're gonna talk about the RSI or the relative strength index, and we're gonna talk about the MACD. Okay, so if you haven't watched my video on how to use Thinkorswim, go ahead and check it. The banner is going to be up on the top. Click on that and watch the video. And then so you know how to navigate, how to use the tools inside Thinkorswim, the tools that I'm using right now. All right, so what are we going to do today? We're going to talk about the RSI, we're going to talk about the MACD, and we're also going to do some support and resistance that I talked about on my previous video. Again, if you haven't watched that video on support and resistance, go click on the banner, go to my video, and learn how to do support and resistance. Practice, because the more you know, the easier it's going to get for you to conduct your technical analysis. Okay, so with that, we're going to start with today. Today's chart is going to be the chart of Apple. If you see here on the left side, we have the ticker symbol AAPL, that's for Apple, and we have the 4-hour chart. So each one of these candles represents 4 hours of price action. Okay, so the first thing we're going to do is I'm going to start drawing some areas of support and resistance. So the most obvious area of support and resistance is obviously the top, because that's where it got rejected. And if you see, we have some support and resistance right here. I mean, correction, we got some resistance. So I'm going to draw a square box. Oh, what happened right there? I got the wrong tool. I'm going to go down here to my tools. I'm going to click on the rectangle. Okay, and now I want to do that, and I want to drag it out. I want to include all of that. Okay, let me change the color of that, and I'm gonna make all the support and resistance the same color. I want to make well, let's make the resistance red. Okay, and then the supports are gonna be green. All right, let's continue to identify more areas of support and resistance. Let's see if this top right here, see, the price came up and it got rejected, came down. And if you move here to the right, it's an area right here where it touched it and went down, and it did it again. So we're gonna do that. We're gonna include all of this right here. Okay, and the reason I do zones and not just a line is because I want to be able to have a whole area where I can make a decision when to get in and when to get out. In the past, I used to just do a line and wait, wait and wait and wait, and it never touched the line, but it was inside the box. So now I have the box because, if I get out a little earlier from the trade, I'm good to go, because it's good to go for me. Okay, if I make enough, I make enough. All right, let's see if we can find another well identifiable support and or resistance. So if we see here, okay, we have an area where the price touched, okay, it got rejected, but then it acted as support. So resistance, it went through it, and then it was resistance again, it became support, 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 and is somewhere in there. Okay, let's see if we can do a small one right here. I'm gonna draw a line right here of support. Okay, an area of support right over there. I'm gonna make this a different color. I'm gonna make this one also a different color. All right, so we have a few support and resistance lines that we can identify, okay? But that's not all we use when we trade in, because we want to make sure that we have all the confirmation available for us to say, yes, that's a good trade, or no, we need to wait a little longer before we execute the trade. So for that, we're going to add the RSI. The RSI is the relative strength index. So we go here to the edit studies, we're going to type RSI, and we're gonna double click on RSI, and we're gonna hit apply, and we're gonna hit OK. So what is the RSI measure? Is the strength of the market. So whether or not the market is at the bottom or at the top. So if it's at the bottom, that means that it has a potential, a very good potential, to go higher. And once it hits the top, it has a very good potential of going lower. But like I said before, you have to wait for your confirmation, because not because it's at the top means that it's going to drop. Not because at the bottom means that it's going to go high. See, let's look at this example right here. The market went up, the price went all the way up, and we think, oh yeah, it's time for this to reverse to the downside. It did eventually here, right? Because this is just measuring the strength. It's not measuring the trend. But when we look here, the price never went down. So we needed to wait for good confirmation to determine if this was a good area to get down. However, if we look at this area right over here, we see the price came down to this area and it eventually bounced back up to, to this point. Okay, so same thing here. Let me make that a little bigger. The price went down and only for a few hours it came back up. And then it came back down again, and then it went back up. It did it another time, and then eventually it got to this area. But it wasn't an immediate, drop and bounce back to the next resistance line. So how do we read this? You have to be able to read and combine it with something like the support and resistance to say, okay, this makes sense. The price is all the way to the top. It's already touched some resistance. Okay, so let's draw another line right over here, another box right over here. Okay, so we're gonna do this right here. Okay, because see, we had some support and resistance right here. So it has a lot of potential once it hit this area to reverse, right? So let's make that red. So we continue with the color coordination. So we know that once it hits this point, it has a potential for this to go down. And then we look at the RSI and we said, okay, it's getting to the high point right here. Once we have confirmation, we can make an assumption that this is going to continue to go down. And eventually it does come down for a few days, 2 weeks in this case. Okay, so let's see again here. The price goes up, and then goes up again, but we know we're in this area that is resistance and then became support eventually. So we see the RSI and we can make an assumption that this can come down. Same thing over here, and then it comes down, right? So it's just a tool to help us understand whether or not there's a possibility for a reversal in the market. Okay, so let's look at this right here again. The price goes up, it hits that area that is strong because it was a strong area before, right? That's when we had the big dip down. And we look at the RSI, and the RSI is high up here, and the price does reverse. And then when it comes up to this area right here, right, continues to go up, and then it hits that area, and then it comes back down. So that is the RSI. Another tool we're going to use today is the MACD. Okay, the MACD stands for Moving Average, Convergence, and Divergence. All you need to know is MACD. When I go here to the second one, click the MACD. When I hit apply, when I hit OK. So now we have this lines and we have this histogram down here at the bottom. Okay, so if we combine the MACD and the RSI we have, and then we combine the support and resistance, then it gives us more confirmation. The more confirmation you have, the better you're going to be when you place your entries and your exits. Okay, so what is the MACD? The MACD is it also measures the movement of the trend, whether it's going up or it's going down. Okay, and it's moving average, convergence, and divergence. So moving average is just, it measures the momentum of the price of a specific stock. So whether it's going up or it's going down. So right here we have two lines, right? So it's clear that it's going up. Now we see that is heading to this area of resistance. We see that the RSI is high, and we see that the MACD is kind of crossing over. So once we have confirmation, right over here, once we see this confirmation, okay, it's high, is here, the green bars are becoming weaker, and then we got a crossover. So that is a good indication that this might continue to go down even more, right? So in this case, it happened. We have one confirmation, we have two confirmations, resistance, and we got the MACD, and we got a crossover to the downside, and we start getting red bars, and it goes down. Okay, so if you combine this with the other ones, then you have more confirmation. So let's see right here. So let's see right over here. Okay, so the RSI comes down. Okay, if we do one more support and resistance, we're gonna see this area where it bounced and it bounced. So we're gonna include that area right over here. Okay, and look at that. It's almost like magic, but it's not. It's pure knowledge. Okay, so we know that this was an area of support, and then it bounced again. When it bounced, we get into this low area. Okay, this low area is called the oversold area. This area here on top is called the overbought area. So now we have oversold conditions is at the low. So we're thinking this is gonna bounce at some point. It's bouncing on a support line or support area. The MACD is starting to turn right from bright red to dark red, and it might cross over because we have this condition. We have the support, we have the RSI, we have the MACD. Once the MACD crosses over from red to green, look what we have right here, and then we expect another move higher, and then it comes up until it touches this other zone. Okay, so that is how you use the MACD with the RSI with the support and resistance zones or lines for you to make better educated entries and exits. Now, this is obviously the 4-hour chart. So for this to develop is going to take a long time because each one of these candlesticks represents 4 hours of price action. So if the RSI is here down at the bottom, for this to come to the top, it's going to take a few days. So in this case was 1, 2, 3, 4, 5, 6 days, correct? And to do the crossover, it took another day. So that was a whole week of trading. If you want to hold your position and you're positive that this is going to go to the upside and you held it for 7 days, then you made a lot of money. From 114 to 122, that's a lot of money. So let's look at a smaller time frame. We're going to go here to the 1 hour. This is what I use, okay? Because I day trade, I like to use smaller time frames, but I'll always look at the big time frames because I want to know the overall direction of the trend. But let's take a look at this right here and see if the MACD and the RSI and the support and resistance made sense. Okay, let's look at this area right over here. We see that the price came down and it came down to this point, and now we start getting some oversold conditions, right? This right here was not truly an oversold condition because if you see the MACD is still red. So the MACD never turned green, right? So if we place a position here to go to the upside, to go up, then we were wrong. Or actually, we were right for a couple hours, 1, 2, 3 hours. But after that, if we held it longer than that, then we will be losing money until it actually turned around this way. So now it comes down again, and now we have this support area, right? Now we gotta wait. What's gonna happen? Is it gonna go up? Or is it gonna go down? Now we see that we have a break, right? A crossover in the MACD, and then we go green. And then we have a few hours of green bars. And then if we place our entry somewhere over here, we could have held it for maybe a couple hours and then make our gains for today. So same thing over here, okay? We have the MACD still red, but the RSI is an oversold condition. So when the RSI went up, the MACD stayed red. It only went up green for a couple hours, for 2 ticks right here, a couple hours. And if you traded this right here only for the day, you could have been positive. But this is not good indication for me to do anything. However, though, if we look here at the top, right? We have overbought conditions. So we know that it's all the way to the top. The MACD is all the way to the top, and now it's crossing over. So now we get a crossover from green to red right here, and we can expect that once those conditions are met, plus we have support and resistance, we can expect a move down to the downside. And this is exactly what happened. The price went down, and then it tried to come back up to this now resistance zone, and then it came back down. Okay, you can do this on the 15-minute chart. 15-minute chart, and then we identify a few more support and resistance. So I want to put another support and resistance zone. Let's see, right over here. Okay, and if you can't understand why I'm doing this, just look on this date right here. Let me make that a different color. Right here, it provided support. Right here, it provided support. Right here, it provided support. Right here, provided resistance. Right here, provided resistance. So the more times it touches that zone, the more it's going to validate that zone. We're not going to be doing a little bit here because it touched it one time. We're not going to do it right here because it got resisted one time. We're going to do it where it touches the most times. That's going to be a very, very strong support and resistance zone. Okay, so let's see what happens with the MACD and the RSI. So we have the RSI come high, right? And it continues to go high because there's no break to the downside. Even though the MACD right here it was coming down and it looked like it was going to cross over, it never crossed over. It didn't happen until right over here, which was after market hours and before the market opened. We have a clear overbought condition, and now we have a crossover on the RSI. And guess what happens? The market opens, boom, comes down, and it continues to come down. It comes down here. Even though it's overbought, we don't have a green in the RSI, and it just stayed like that for a while. Okay, if you want to look at the 5 minutes, if you trade with this on the 5 minutes, let's see what happens. We see that we have overbought conditions right here, right? And we have a crossover. However, though, this is before the market open. So if you have an account that allows you to trade before market opens, that you could have traded this and get out, and that would have been fine. But even if the RSI did not trigger overbought conditions, we see that the MACD here had a clear crossover to the green, right? So this was today, and it did a clean crossover to the green, and then we know that if this is going to go up, where's our first target? Our first target is going to be the previous resistance line, which is right here. And that's exactly what it did. If you look at this, the market reverse came up and it stalled right here. It stayed here for a little bit. So this is 5 minutes. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So that's almost an hour, right? Almost 1 hour of price action where the market didn't know whether or not it was going to break it, and eventually it broke it. Okay, so this is how you use support and resistance in combination with the RSI, in combination with the MACD. The MACD and the RSI are the two instruments that most traders use. So most traders base their analysis solely on the MACD. Okay, let's look at this right here. MACD and the RSI. We have this drop into a support area. We have oversold conditions, and then we start breaking into the green with the MACD, and then it goes up for a little bit until the MACD starts turning back red. Now, what's the catch? The catch is that these indicators, all indicators, all studies, all indicators, all strategies, everything that comes in Thinkorswim and in any other platform are going to be delayed because they cannot trigger until the action has happened. So for this to happen, we need to have at least 1, 2, 3 candles of action. Okay, so don't think that this is going to give you the indication before the price has taken an action, whether it's going up or down, because that will be cheating and everybody will be making in the stock market, and that's not how it works. So in order for this to tell you, yep, that's what happened, right? You have to have the action of the price action occur, and then the indicators will trigger. If you see, right here we have an oversold condition, but the MACD did not trigger until over here, right? So the MACD waited until there was good confirmation until here before it triggered to the upside. All right. So if we go to the 1 minute, I will recommend not to do this on the 1 minute because it's very tricky, especially if you're just now learning how to day trade. It could be very, very, very dangerous for you, and you could lose all of your money in one trade if you don't have good risk management. But if we see here on the 1 minute, right, we see we have overbought conditions, and then we have the MACD going into the red, right? So we can assume that the price is going to go down. And what happens? The market opens and the price does go down, and it stays down because there's not a clear turn into the green until here. So if we did this right here, we could stay here from here and then ride it all the way until there, or even if you get out right here, if you were able to get as soon as the market opened and just ride it all the way to here, you could have made some money. And if you waited all the way here, you could have made more money. Okay, now we have this reversal here that happened around 11:30, and then the market went all the way up. Okay, so what happened here? Let's see. We have this area up high, and then we have a crossover here in the MACD from the green to the red, and then we have a discharge for a few minutes here in the price. But we know that since, like I mentioned before, if the market goes down, it is going to try to come back up to test the high of the day. If the market goes all the way up, it's going to try to bounce back to test the low of the day, in some cases, not every case. Okay, all right guys, so I hope this is making sense. Again, I'm combining what I'm teaching, what I'm showing you guys in previous videos. So before we talked about the support and resistance, and here's my support and resistance. And today we're talking about the RSI and the MACD. The RSI and the MACD are the things that most traders use to make calculated decisions. But you should not depend on the RSI and the MACD just because they are at the bottom or at the top. You have to be able to do your own analysis. I hope these videos are helping you. Please let me know if you have any other questions. Leave me a comment, and I'll try my best to answer all your questions or your requests. And again, before you start trading in the stock market, I recommend you practice, get a paper trading account, and practice and practice and practice. If you cannot get a paper trading account, then just practice support and resistance and the RSI and looking at the MACD on Yahoo Finance or Google Finance. Those sites are very free, and you can use their tools to practice drawing support and resistance and setting up the RSI and the MACD, and just watching the market, making predictions. You know, if you don't have a paper trading account, just simulate entering and exiting your trades on a paper. Keep track of that to see how successful you are with your predictions. All right, guys, take care, and I'll see you later. Bye.